Revelations from my man cave. My name's Jeff Banks, I'm co-founder of Property Portfolio Solutions, and today I want to talk to you about taxes. Now I'm going to talk to you about state taxes, and I'm not going to talk to you about federal taxes, because the federal taxes are a thing that I talk about in another video. So that's GST, that's capital gains tax, which actually forms part of income tax. They affect people the same no matter where you live in Australia. These ones though, stamp duty and land tax, are very different beasts. And depending on where you live in Australia, and in some states like the Northern Territory where you're actually buying a property, the actual tax can be different. So let's have a look over here at stamp duty. Stamp duty is quite easy. What I did here was I went into this site here called stampdutycalc.com.au, and I plugged in $1 million purchase, and these are the different amounts that you could pay depending on where you purchase a property. Now in New South Wales, a recent budget announcement said we're going to go towards the New Zealand model, and rather than pay a large amount on the purchase price, we're going to have what's called a property tax for the duration of the ownership. Now that's not law yet, so we don't have any legislation to interpret or work out what the hell it's going to mean. But what it will do for the investor, if it goes the way it's been commentated, is that we won't pay this large amount up front. What we'll do is we'll pay an amount for the ownership period that we have it, and that might make it much easier for investors to get into the market. It might make it easier for those people who want to buy and develop property to only pay tax on for the period that they own it, rather than paying this big entry price to come in. Now it's interesting to see that South Australia, based on $1 million purchase, South Australia is the dearest place to buy property. That's a $57,000 stamp duty, as opposed to the ACT, which is down to $37,000. It's why it can't be uniform across Australia is beyond me, but that's what we have to live with. Now we go over here to land tax. Now land tax is a myriad of different thresholds, amounts, charges, surcharges, and what have you. And on our website we've got direct links to each one of the states' land tax calculators. Some of them are based on what you own at the 31st of December, that's certainly New South Wales. Others, it's what you own at the 30th of June, and it's based on what's called the unimproved capital value. Now, to work out what the unimproved capital value of your property is, the best place to look is probably a rates notice, because the councils tend to use the same value when they're working out how much in the rates to charge you. Now you need to be careful with places like Victoria, where they have a surcharge where the owner can be deemed to be a non-resident, and it's quite steep. Others have different taxing of things like trusts. Most of these don't have thresholds where we have a discretionary trust, because they think that if a discretionary trust doesn't really have an owner, so therefore why should they get an owner's threshold? So when it comes to what sort of entity you should potentially use to buy a property, you should look at the charge to see, from the land tax point of view, to see if the end justifies the means. Now if you're looking to put something in an entity to combat risk, then this is a cost of that risk. Just remember that. It's not something that should stop you doing something, it's just a cost to think about. When it comes to looking about where you're going to buy in Australia, it's all about the numbers. If you're going to invest in Australia, do something in property that is going to get you towards your goal, then these two need to be considered. My name's Jeff Banks. I'm from Property Portfolio Solutions, where your legacy is our inspiration.